Hi, I'm Gordon Lamphere, and welcome to the Real Finds podcast, where we have real conversations with key entrepreneurs, activists, and researchers who are shaping the real estate industry and, as a result, our world. On today's podcast, we'll be speaking with Jared White. Jared is a lawyer and the managing director of Quadrum, a global real estate investment and asset management firm, where he oversees the firm's transactions and complex legal matters. On the podcast, we discuss how Quadrum Global identifies opportunities, develops unique properties that outperform the market, and how a user-focused approach is the key to profitable developments.
Jared, thank you for hopping on the podcast today.
Thank you for having me. Appreciate it.
So, how'd you get into the world of real estate?
It's a good question. Sort of by accident. I was always interested in finance, but I felt that there was staring at a Bloomberg terminal was not as hands-on, not tactile, and not as creative. And so there's real estate, honestly, is a world where there's sophisticated finance going on, but there's also a creative element to it, design. It's tactile. You can walk by and take a look at something physical. It's honestly, in some ways, it's very analog, and that's what I found interesting about it. But I ended up getting into the business a little bit of roundabout. I had worked in real estate after college, and then the GFC hit, and real estate was not a good place to be. And so the opportunity cost was quite low to go back to school. And so I decided to go back to law school. I ended up graduating from Brooklyn Law School, and I practiced law for a few years. And then, like most things in life, there's a process of elimination. I realized that being a lawyer was probably not for me, even though I enjoyed it and I met some great people, and I wouldn't have traded that experience. And then in 2014, I took a job with Quadrum, and I've been here ever since, going on 11 years.
So, we can talk a little bit about Quadrum, but I think what's most interesting about Quadrum is you guys work on some pretty interesting projects. And one of the projects that I found particularly interesting was you have a building in London, I believe it's 11 Belgrave. And I know that there's going to be a wide range of opinions that our listeners have about ESG and environmentally friendly buildings. And there's going to be some people who are incredibly supportive, and some people who are going to say, hey, what's the bottom line? And I think overwhelmingly, it's been a successful building economically, even if you're not particularly an eco warrior. So I'm curious, kind of how did that deal come about? And can you tell me a little bit more about kind of building ESG and environmentally friendly buildings?
The truth is, I'm not super involved with that project. But what I will tell you is that it's won a number of awards. It's a very unusual in that we were it's in an area in Victoria that is not really known for office, and it's notoriously difficult to build and to add on. And we, over the course of a few years, developed with a fantastic team, developed they call it a scheme in London. Here, that's a pejorative word, but a development scheme that did so many groundbreaking things for London, not necessarily for the world. One accolade is that it's the number. It's a 5.5 neighbor score, which is a UK rating. It's well LEED certified. I actually have some notes on it just to make sure. There's so many awards I couldn't quite keep track, to be honest with you. But anyway, the way that deal came about was just we were looking to maximize the scale of the building. Obviously, in London, open floor plates works well for office, and we were looking to maximize the scale. And to do so, we had to do something that really, was outside of the normal scope of an office redevelopment. And it's been working out really well. It's in lease up. There's been some amazing leases. The leases are well in excess of our underwriting. Our cost basis is too, but in general, it's a good project. And it's certainly, it certainly stretched our imaginations in terms of what was possible from an ESG perspective.
So, what do you think? I'm sure the London market is different than most of the markets that we experience in the US. And I've certainly had conversations with people on the other side of the pond about um, the London market, and it's a very unique market in many ways. But are there insights that US developers, which is primarily our listener base, or US investors can take from that building and the London market?
The truth is that we have a team. We're based in London, so our CEO is based in London as well as our COO, and our CEO Elias really oversaw that project. Like anything, I would say, because real estate is an analog business and it's tactile, like I said, being close is really important. It's very hard to manage a project from afar, and so Elias being very very close and being present at the building often was definitely a key to the success there. He understood the office market, and there are a lot of firms that really are starting to appreciate. And stepping back for a second, in a city like London, it is very hard to achieve. It's hard to build ground up, and it's hard to achieve those types of ESG ratings in retrofits. And so to do this really was like pushing a boulder up a hill. Um, One example that you don't really appreciate, but most offices in London do not have operable windows. Um, and so we have operable windows. Obviously, COVID now fresh air is much more appreciated. Um, another little thing that was very unusual about this project is that the elevators, normally elevators don't have fresh air intakes or air purifiers. You kind of just get into an elevator, you're stuck in there, whatever air is kind of in the elevator is in it. And we figured out a way. We were told it was impossible, and it was going to be, first we were told it was impossible, then we were told it was really costly. And once we got the second answer, we figured we could do it. But we have elevators that actually have air purification and have a fresh air intake. And so all of those are little examples. I realize that there's a lot of small little things like that, but that add up to an experience that really is far and away above a typical office that you find out in central London. If you go out to Canary Wharf, you can find large towers that have some of these features.
So, in terms of that, do you think that there's demand for more environmentally friendly and ESG driven kind of offices in like high end American markets? We're talking, New York, Miami, Chicago, LA, San Francisco, or do you think that office that incorporates factors beyond just price per square foot and bougie insides is just like a London centric thing?
I think it depends on the perspective of the tenants. I mean, obviously, this whole ESG and the concept of it doesn't really work if it doesn't drive a premium. Now, you can justify getting a lower yield and you can justify, but if there's no premium whatsoever, then it really doesn't work. And to get that premium depends on the perspective of your prospective tenants, the perspective of your prospective tenants. So a lot of the businesses, it's sort of unfortunate, but a lot of the businesses that do invest in this ESG are financial firms that kind of have free capital to devote to this type of thing. A lot of businesses that run on a very tight margin can't afford to be picky about whether there's fresh air in the elevators. But if you have a long-term horizon and if you care about your employees having a good experience in the office, you will find certain firms. It takes longer to lease up. There's no question about it, because just like it takes longer to sell a Ferrari than it does, I drive a Volvo, so it takes longer to sell a Ferrari than a Volvo. So it does take longer to lease up. There are fewer people who are interested in it, fewer people who pay a premium for it, but those that do tend to be a little stickier. It's hard to imagine a firm putting down it's putting a flag in an ESG building and getting a reputation, and having employees rely on the experience of being in the office and then have that pulled away. So you hope what you lose in terms of leasing velocity, you gain in terms of stickiness.
So one of the places where we've seen a lot of velocity is your Greenpoint development that's in Brooklyn.
Yep.
And I'm curious how that project evolved because we're shifting. It's an entirely different area of the commercial real estate market, but I think it's also a pretty fascinating development. And it tells you a lot about the high end New York market. Can you tell me a little bit more about how that got off the ground and kind of why you targeted that area in particular?
Yeah, Greenpoint is always sort of an extension of Williamsburg. Um, and, Greenpoint was that whole waterfront was zoned for manufacturing, industrial. It was not permitted to build residential. 2005, during the Bloomberg administration, they rezoned that entire area. I don't remember the scale and scope of it, but I forget, maybe 40 acres or 50 acres of the waterfront were rezoned. I think they were talking about either 10,000 or 20,000 units. But if you fast forward to 2014, roughly 10 years later, there still wasn't a single building that had been built on the waterfront. A lot of planning, a lot of things going on. At that point, Williamsburg was already starting to get expensive, was starting to price people out, and people were kind of looking for that next extension. And there's always an investment philosophy to stay, to put yourself in the path of growth, right? Rising tide lifts all boats. So, you want to put yourself in the path of growth. And for us, a lot of people took that philosophy and bought further out on the L train. So you go to Graham Ave, then you go to go successive stops on the L train, and that is one of the paths of growth. We felt going north, Greenpoint always felt like an extension culturally of Williamsburg. So in 2014, we bought this plot of land, really essentially sort of land banking it. There was a zoning quirk on our block that we thought we might be able to get the site rezoned. I'm happy to go into it, but it's another 2 or 3 minute story. But we essentially were unsuccessful in doing that. So we bought it, A, to land bank, but B, because we thought there was a 50-50 shot that we could get the site rezoned and get additional density. And so those are the two reasons we bought it. And then when that rezoning attempt failed in 2016, 2017, which it failed really because MIH, mandatory inclusionary housing, had been put into law. And if you recall, for anyone who's steeped in the New York City development market, the tax abatement for multifamily development was called 421A. That was the original program. It actually expired in 2016, 17, and it wasn't renewed for about a year. And so in that year, we're sitting here, we have to do a mandatory inclusionary housing if we rezone the site, but we don't get a tax abatement. Now, even without affordable housing, real estate development, multifamily development almost does not work, even doing 100% market rate because of the taxes. So the abatement is sort of a precondition to having any multifamily development make financial sense. And so we basically pulled away because of that and said, okay, well, we're not going to chase after rezoning and spend all this money if we don't like the economics. But around the same time, the Greenpoint really started to mature. So in that 4-year period between 2014 and 2018, there had been some buildings that popped up, one of which happened to be across the street from us, called 21 India. It's now called the Greenpoint. It's about 360 units of residential multi. And in 2017, I believe, they changed the top 10 or 15 floors, about 95 units, they decided to make condo. And they had started selling. And they were selling quite well. And if we looked at those numbers and we said, okay, it's maybe we put ourselves in the path of growth, the market moved, the tide lifted, and maybe it makes sense to do as a condo development as of right without rezoning. And so in 2018, we embarked on that phase. We had hired Morris Adjmi. And one of the issues with the building, or with our plot, is that it's 650 feet long between the waterfront and West Street, and only 100 feet wide. So it's a very long and narrow. It's the size of 2 football fields, literally. And normally, what someone would do with a waterfront site is push all the bulk you can up to the water. And what Morris, as part of his creative process, he had been looking at the history of Greenpoint. And Greenpoint actually turns out was sort of like the Silicon Valley of shipbuilding in the 1800s. They actually built the first iron-hulled ship for the Union Army during the Civil War. The first non-wood ship that was built for military use was built in Greenpoint. And when he's telling me all this, and that Greenpoint was this, sort of like a Silicon Valley of manufacturing and shipbuilding, my jaw was, on the floor. I was like, really? I mean, doesn't it seems like it's gone astray, far astray. But anyway, from that. But anyway, so he designed a building where he had two towers, and it's much more expensive to do two towers. Think about you have extra facade. You essentially have two separate sets of elevators. It's almost like building two buildings. But if you look at the building from a profile, it looks like a ship with two smokestacks. And he said one of the beautiful things about doing this is we can create all of these little step backs and get all of this private outdoor space. And more importantly, the East Tower, which is closer to West Street now, would see over a lot of the buildings that put all their mass up at the waterfront. It will see over the backside of those small buildings. So 21 India, our neighbor, is built about 4 or 5 stories the whole way. And then the waterfront is built 40 stories. And so by floor 5 or 6 of our building on the East Tower, you see right over the back of 21 India, and you see the river, you see the Manhattan skyline. And so we thought it was actually pretty an ingenious move. We got 8 sets of corners instead of 4. So we have much more light and air coming into the buildings, coming into the units. And so that's what we did. We designed it in 2018-19. We started foundations. COVID, knocked us for about a year and a half. We paused it, and then we picked it back up in end of 21. And we completed the building. Now we're about 92% sold. We've broken at least 3 price records, possibly more, 3 that I know about. Price per square foot for a 3-bedroom in Greenpoint, price per square foot for a 2-bedroom in Greenpoint, and the overall chunk price of a condo in Greenpoint, which is 5.8 million, 5.7, 5.8.
So do you think that 2 towers approach and kind of the model of really going for a heavy light and air model is what drove some of the economics? Or do you think it was primarily site location? What do you think was the primary driver in some of the economic records that you guys have broken in terms of penthouse sales?
I'd like to say that there's a formula that I could tell you. I'd like to say that there is. There's really not. There's not any one decision. In development, we all like to value engineer, and we like to say, well, if I do this, what's the ROI? If I do that, what do I save? And what's the inverse ROI, right? I mean, lack of an ROI, you clip anything, you value engineer out anything that doesn't have an ROI, and you add in anything that does. And the calculus for us is a lot more simple. We kind of just built a great building, and we think that the commercial success will follow that. And so, of course, we value engineer. We don't take an extremist approach to that mentality, but we certainly don't overly engineer the science of this value engineering process. So one thing is that 8 sets of corners just obviously means you have more corner units, which have more light and air and better layouts. We tried wherever we could to put in islands as a design feature because people love islands. The interior design was very referential to Greenpoint, so it wasn't overly. We didn't want it to be overly gaudy or ostentatious. We wanted it to be referential to to Greenpoint's past, still being classy. So the window system is really, really fancy and high end, and it's this grid. This sort of looks like casement windows, but it's this grid pattern that you would tend to see in an industrial building. So it's referential to Greenpoint's industrial past. One other thing that we did that is certainly not an ROI, and many people would tell us that we're crazy, is we used something called the VRF system, variable refrigerant, essentially a high-end electric heating and cooling system. And you would typically see it in very, very high-end condominiums in Manhattan. It's much less common in condos like this. One of the advantages is that it's more energy efficient. But the most important thing is it's much quieter. So you don't have a fan coil unit inside your building, inside your unit. And so what you don't get is, you don't get that loud kind of like low hum. It's really like an ambient air blowing. And so you can achieve heating and cooling much more efficiently from an energy perspective, but also sound and lifestyle. It costs us a lot more money to do, and actually the zoning code in New York kind of punishes you because they allow you to deduct certain things as mechanical spaces in a typical four pipe system, which is more what you'd see. Most of our competitors had that, and they don't allow you to do a they don't allow you to deduct certain refrigerant lines in the VRF system. So it actually also hurt our mechanical deductions, besides being more expensive generally. But we touted it and we marketed it as the sign of quality in this building, and we think people actually bought onto it. And one of the issues that were it's not an issue, I would say, but one of the funny things is like people say that the units are actually too quiet, that there isn't, people are like, well, I hear noise on the street or this or that, and the windows are far exceed their STC rating and all that kind of stuff. And it's because there is this sort of like ambient noise that when you're in any apartment from the HVAC and from other things too, and because we don't have that, other things feel louder, which is ironic. But anyway, no good deed goes unpunished.
Yeah, as someone with kids, you have those white noise machines for kids, and I wouldn't be surprised if an extremely quiet apartment, maybe some folks are putting those in. In terms of some of the other like holistic things, though, that I think that I've seen, at least in some of your marketing materials, um, do you think there's anything else that you guys put in that makes the building unique that maybe drove people towards your product versus some other product that's in the market?
Yeah, I mean, what I would say is our amenity package. It's certainly not unique that we have the amenities that we have. If you go to any of our competitors, especially ones that are larger, you'll see the same amenities. They all have a pool and roof decks and this and that, kids park and a lounge and whatnot, gym. But I would say that our amenity package is certainly oversized for the size of the building. So we have about 30,000 square feet of amenities. We have a pool, we have a lounge, dining room, co-working space, dog wash. We have storage on site. We have a gym with like a mirror studio or ballet studio. We have a sauna. On the second floor, we have a proper kids room, and then we have a sort of a teen. We call it the Nook, with bean bags and a TV. We have an outdoor park on the second floor, and then each of the towers has their own roof deck. One is dedicated towards passive recreation, so it's just kind of like an open lawn where you could come and have a picnic. The other is more active, so there's furniture, there's grills, and that's sort of the social side. So that type of amenity package you'd expect to see in a building with 400 units. We have 171, and so I think that is also unique, is that the amenities are there. They're not really, I mean, they are used obviously, but it really is the kind of place where you could rent, rent the lounge for a party for your friends, and it's not the kind of building where those amenities are always in use, and you kind of feel um, like you don't have any agency over them. You can't use them whenever you feel like or is convenient. So
Well, one of the amenities I know you mentioned was a co-working space, and I know we've been working with a number of individuals who have put those in their buildings. Um, eh, I'm curious, has that seen a lot of use? Was that, you think, a driver in the post 2020 world, or is that just kind of another a check in the box for developers looking in the New York market?
yeah, look, I think it's very useful to have. Everyone appreciates a change of scenery. Working from home now I wouldn't say that I mean, there's still sort of a lag, and the if impact of COVID is still impacting obviously the return to office, but I don't think that's a trend that's going to last 50 years. But I do think that Zoom and all of these technologies are enabling us to work from home more often. I would say in a neighborhood like Greenpoint, which is a little less transportation friendly, there isn't a direct subway that's accessible to Manhattan. There's the ferry right there, and so it is accessible in some ways, but the people that I would think that people who are attracted to Greenpoint are attracted to it because it is sort of a little enclave. It is a little removed. It's quieter. There's not as much hustle and bustle. And so I would expect that it would filter for people who do work from home on occasion, or higher percentage of people who do. And so, yeah, so we were intentional about having that. It's not a huge co-working space. It is nice to have, to get a change of scenery. I think, look, it's it's not a huge space, and it certainly didn't displace other amenities for us. So, was it the first amenity we put in? I don't recall, but probably not. But it certainly was important to have, and I don't think it really displaced anything. So,
When you
um,
when you were talking about filtering for people and trying to kind of understand who your buyer profile was, can you talk a little bit about like what drove your buyer profile? Because
yeah,
I know that that's one of and kind of how you strategized and planned around a buyer profile. Because I know that's one of the conversations that we tend to have the most when we're selling land sites to developers.
yeah. So there's a couple of different segments. There's no one, sort of demographic that you can speak to, and so you need to just create a building that's as broadly appealable as possible without giving up the edge, right? Without giving up your edge. And so that's, again, that went back to how we thought about the building when we were designing it. We were just trying to make decisions that we felt, you know, if I was living in the building, what would I want to see? And I use that sort of we use that sort of as a guiding principle. And again, not to be reckless with ROIs and all that kind of stuff, but we didn't want it to be over the top and ostentatious. We didn't want it to be, not luxurious enough. And again, the VRF system is an example of luxury. So when it comes to the buyer profile, we just kind of looked at a few different segments. There are people who just like new developments and they buy because they get good value. They think they buy early on plans and they get stuff. And for those people, having a reputable developer, a reputable builder who has a lot of skin in the game and who's building a quality product is usually important. So we wanted to get that. And that exists across all demographics. There's young people who like new construction, old people who like new construction. Every different, corner of the world, people like new construction. Then, we obviously figured there would be a lot of people looking, to come to Greenpoint for a slower pace, right? Moving from Williamsburg, moving from other kind of high traffic, high transportation neighborhoods. And that's why we built the large amenities. And we also had a very high mix of twos and threes. So we had 51, 41, 92 units. More than half the building is more than 90 units. More than half the building is twos and threes, 2 bedrooms and 3 bedrooms. That was a little contrarian. If you look at most new developments, they have a high percentage of ones, high percentage of twos. They like threes because they sell for high price, but they don't sell quickly. So people don't build too many threes. And studios, they move very quickly, but they're the lowest price per foot. We actually built a lot of studios and a lot of threes. We were kind of contrarian in that regard. But twos and threes we built a lot of because we figured there would be people who, just imagine someone lives in Williamsburg, they're in a 2 bedroom, they have one kid, they're having another one, they need more space, they can't exactly afford what they want in Williamsburg, they move north to Greenpoint. Okay, so we have a lot of 3 bedrooms that would check those boxes. And then the amenity package, obviously, with the children's amenities, suited there. I'm trying to think what else. I mean, that's pretty much it. I could keep talking about the different demographics, but it's.
So one of the other things that I think that makes you guys unique, kind of as a business in general, is you're also involved with RLO hospitality and kind of the hospitality management world. And one of the big conversations that we've had on the podcast generally is that I think increasingly as we move into post 2020 world, we've seen almost all asset classes that involve people. Like we're not talking data centers or industrial that has very little people involved, but most asset classes with people have increasingly moved towards a hospitality management strategy in terms of how they engage with their customers. And I'm curious if some of your hospitality background as a business was involved in the development of your residential assets.
I- like everything in life, your experience comes to bear as you do new things, and that's why experience is valued. I mean, any employer would value an employee who has experience in something for obvious reasons, but there wasn't such a one-to-one tie in that regard. I mean, the development team at Quadrum has built dozens of hotels, and at the time that we were building the Huron, we were building 2 or 3 hotels. I wouldn't say that there was some specific trick that we had up our sleeve that we deployed at the Huron, in respect to the hotels, but we definitely understood. What I would say is operating a building is is a challenge no matter what. Residential, hospitality. There's people, there's characters, there's people, there's things, and a lot of developers, I think, miss or underappreciate or undervalue operational ease when the building's built, especially in a condo. We're going to sell out of it. I don't know if the manager has a hard time operating and they have a package room that's too small. Like, some people say, sorry, you're shit out of luck. Not my problem. We definitely didn't take that approach, because when we build hotels, Quadrum owns all of the Arlo hotels. We also operate them. So if the package room is too small, there's a guy who sits in the office next to me who has to deal with that. And, and so we don't get to run from any of our poor decisions. And so that philosophy definitely came into play at the Huron. And that doesn't mean we didn't make mistakes or anything like that, but we involved, what I would say is we involved a property manager. In this case, we used First Service Residential. We involved them very early to make sure that all the operational needs, garbage baler, like all these things that we don't really know about. What do you need for a building this size? Do we need refrigerated storage for groceries? How big does it need to be for this size building? Do we need one on each side because we have 2 towers? Do we need to have 2 bike rooms? Is it going to be annoying if you have the bike room on the east tower and you're in the west tower? You have to walk across. All of these little things they're all small in the scheme of things, but they impact people's experience, especially small things that repeat themselves over and over, like a bike room being on the wrong side or the wrong spot would annoy somebody. And it's small, but it would annoy somebody because they have to do it every single day. So anyway, that appreciation for the operation of a building, I think, came to bear when we built the Huron and designed it, and we always had that in mind.
So one of the things that's always in mind with our podcast is our final 4. It's a great way to wrap up the podcast and kind of learn a little bit more about you and kind of where you see the world going. I think one of my favorite questions I always love to ask, and we can put on our Nostradamus caps, but it's, what do you think is going to change the most about real estate over the next 10 years?
Ooh, that is a good question. What do I think is going to change the most about real estate in the next 10 years? I mean, oh man, I want to say something about AI. I'm trying to figure out how to get that, weave that in.
Yeah, you don't have to influence a stock price by putting AI on there. It could be something a little less buzzwordy.
Yeah, no, I like what I would say about real estate is that what I find is that it's becoming more and more a tale of 2 markets. So like really Class A trophy property is breaking shattering records, and the traditional discount that you'd see to B and C and even D properties, the gap is widening between the A and the C stuff. And the office is a good corollary for that, and a good, but it works in other, it works in residential as well, and in hotels, frankly. And so I would say that what I think is going to happen is there's going to be, the next 10 years is going to be a serious reordering of the value add space. And people are really going to take, there's going to be fewer and fewer value buyers and more people who want to take stuff and do what we did in Victoria and at 11 Belgrave, and just completely reimagine something. And that's going to put hopefully a lot of people to work, and in the construction business, design business, and hopefully it's going to be a home for people to work once it's built.
So when we talk about reimagining things, I know we can't reimagine our lives, but there are a lot of people that are starting out their careers who listen to this podcast, at least a solid percentage. And I'm curious if you could give 1 minute of advice to a young young Jared in the industry. What would that advice be?
Yeah. So there's a couple of guiding principles that I have that I think about myself for myself that I think are useful early in your career. So one thing is, it takes a lifetime to build a reputation, and in a moment you could throw it all away. So conducting yourself with integrity and honesty always doesn't mean to be a pushover or roll over. You can be firm and conduct yourself with integrity. And so I always do that. I can be very, very firm at times. So again, that's not a license to just roll over and be treated unfairly. But that's one piece of advice. The other is a sort of a general philosophy, which is just say yes to things. People going out for drinks. My wife wants to kill me all the time because I'm going out for this, or I have a dinner for that, and part of real estate, especially the deal making business, it's first and foremost a people business. No buildings get sold without people. One person deciding to sell and one person deciding to buy, and a bunch of other people helping along the way, lenders and lawyers and architects. So it's a people business. And so just say yes to things, say yes to events, go to things, you know, try to never pass up a meeting if you can avoid it. And so that doesn't mean to upset the balance in your life, like the balance in your marriage, for example. But just say yes to things and be present. And an in-person meeting is always 100 times more impactful than a Zoom. And so if you're ever trying to get something done, an in-person meeting always gets, is much more likely to be successful. So those three pieces.
I couldn't agree more. There's so many deals we've saved over the years by sitting down and breaking bread, or just having a cup of Joe with somebody that we've been working on and having constant fighting. One of the things that we fight for, and sometimes it's hard, is to try to get book recommendations. I'm a voracious reader, not always physically, but sometimes in the audiobook world. And I'm curious if you have a book that you would recommend our readers pick up.
Oh, there's yeah, well, The Power Broker is a famous one that I think everyone should read. It's unfortunately, I'm looking up the name of this book because I can't quite remember it. It's The Power Broker is about Robert Moses. That's obviously
It's
that's
a New York zoning
It's a
classic.
legendary New York book.
Yeah.
There's a book by Jane Jacobs. Now I'm blanking on the name of it because I read it years and years ago. But it's about what makes cities. Jane Jacobs was, an urbanist. It could be the death and life of great American cities. But one of the things that I appreciated about her book and is that, a lot of times our lives we're trying to order for efficiency. So it's like, I'm just using a simple analogy, but like you think, Silicon Valley, all the tech companies being next to each other, it creates efficiency, hiring people. Oh, they just have to move to the office building next door. All the zipper manufacturers, businesses are all in the same spot. So they all have the same, and that creates efficiency. And I think what makes cities great is that the zipper manufacturer is next to the button manufacturer. That's what creates innovation and stepping outside of efficiency. So efficiency and innovation sometimes can be, on an inversely correlated, the same way quality and scale sometimes can be. And I found her book to be it sort of let me understand how and why cities have this gravitational kind of force to them that makes them these centers of innovation. So I really appreciated that. And it's centered in New York, which is where I'm from. So.
Well, I appreciate that book recommendation. 90% of what we do is industrial, office, and land brokerage, and we bring on people from a variety of asset classes because we believe that innovation comes from crossing over and learning a little bit about another asset class. And I know that there are numerous things we've applied on this podcast to our own business and our own practice from a variety of other asset classes that have been extremely valuable. So in terms of, though, the ultimate value of this podcast, it's always about finding the next person. And that's what the Real Finds podcast is about. It's about having real conversations and talking to real men and women who are in the arena so that we can get a little bit of advice from. So I'm curious, who's the next person in the world of real estate that we should have on the podcast?
The next person in the world. Oh, someone may kill me for throwing their name in. In the world of real estate. Well, what I would say is, we work with obviously a lot of great attorneys. There are two attorneys that I really love, that I work with, and one of whom actually is based in Chicago. You're based in Chicago, I'm presuming.
We are, yeah.
And the Michael Jordan was the giveaway, the jersey. So an attorney at Shepherd Mullen named Mike Roth is one. Okay. And then another attorney named Adam Copald at Goodwin Procter, who's a close confidant. And a third, an attorney named Adam Feimer at Haynes Boone. All three specialize in real estate. All three, I would not get into a ring without having one of them, being my blocker / counterpuncher. So we rely on all three. Yeah.
We'll have to reach out. I'm a lawyer, I in a previous life, that was a little bit of my world before getting into the world of real estate brokerage and investing. So we're always happy to talk to lawyers. That's not an issue. I'm married to one. So in terms of all of that, though, there's one last question that we do have to ask, and that's if somebody wants to get in contact with you, Jared, what's the best way?
The best way is to email me. You want me to give my email?
Yeah.
It's JWHITE, J White, at Quadrum. That's spelled QUAD as in David, RUM as in Mary, quadrumglobal.com.
Jared, thank you so very much. We really appreciate it, and we have to have you on in the future.
Thank you so much for having me. Great time. Take care, Gordon.
Thanks again to Jared. We appreciate his insights. And if you enjoyed the podcast, please give us a like, a 5-star rating, and a review. Your comments, interactions, and subscriptions truly matter and help us continue to provide quality guests. You can find us on YouTube, Spotify, or wherever you get your podcasts. I'm Gordon Lamphere of the Real Finds Podcast. Thank you for listening.